Hey everyone, it's Mike from Orderflows, and welcome back to my channel. In today's video, I'm going to talk about an order flow strategy that is one of my favorites. And to be honest, it sort of gets lost in all the types of order flow analysis that we do nowadays. Based on things like delta, point of control, obviously imbalances, volume, etc. And it is the stacked imbalances. Stacked buying imbalances and stacked selling imbalances. So let's dive deeper into it because it's sometimes the simple things are something that you can wrap your head around a lot easier than some of the more complex things. So what is a stacked imbalance? Well, first of all, we got to talk about a stacked imbalance. Now, this is your normal basic footprint chart that's available on most softwares now. And, when I first started trading with order flow and, introduced to it back in the late 2000s, this is what an order flow chart looked like, right? It was your basic footprint with the volume traded on the bid, the volume traded on the offer. You can see where there were imbalances in the two-way auction. You can see where the point of control was. You can see what the delta was, the volume, etc. But that was pretty much it. Now we've got all sorts of tools for identifying what's actually taking place in the order flow, right? Where value is developing, where there's exhaustion, things like that. But today I just want to sort of keep it simple, back to the basics, if you will, and talk about stacked imbalances. So an imbalance occurs in the two-way auction, right? There's a bid and there's an offer. And when you have an imbalance in that two-way auction, depending on where it comes, if it comes in, if it's an aggressive buying imbalance, the volume that trades in the footprint is going to show a blue color because it's aggressive buying. If it is a red color in the footprint, that signifies aggressive selling, right? 75 contracts traded on the bid at 63 and a quarter versus 13 that traded at 63 and a half, right? So that's a selling imbalance. Now the numbers that are black in the footprint is just your normal order flow. It doesn't reach the threshold to be considered an imbalance because, remember, an imbalance or that aggressive trading is what causes the markets to move because there's a bid, there's an offer. If somebody doesn't cross that bid offer line, the market's not going to move. It's just going to stay stagnant. Okay. And when you have more aggressive trading by a certain percentage, I use 4-to-1. That's sort of the industry standard where most people start. But again, that's not set in stone. Some people use 3-to-1, 300%. Some people use, 10-to-1. Obviously, the higher number you go, the less imbalances you're going to see in the market. All right, so what is a stacked imbalance? Well, that's an imbalance where you have 3 or more imbalances stacked neatly on top of each other, either buying imbalances or selling imbalances, right? Now, most order flow charts will, again, identify the imbalances in there, right? But they don't always identify when it's stacked. And people say, well, do I really need to see that? Well, it just visually makes it easier for you as a trader, right? We live in this age of, Instagram, Pinterest, Facebook, and, and God forbid, I throw TikTok in there. But, where we process, images much faster than words or numbers, right? A footprint chart is basically numbers. So being able to identify where you have a stacked buying imbalance or a stacked selling imbalance is going to draw your attention to, hey, you know what, something's happening right now in the market. And really, when you're watching order flow, analyzing the order flow, you want to be alerted when something is happening in the market, as soon as it happens, right? Order flow is best used when, you take advantage of it as it happens. So, on my Orderflows trader, we have a setting in there for stacked imbalances, and there's 2 ways you can look at them. First one, I'll just show you as fixed, and what that is, that will just draw it out. It'll highlight the stacked imbalance in the bar, which is, is nice to see, right? Because we want to be alerted to it. We think that I'll be able to pick that up, but sometimes, we're in the heat of trading. And maybe sometimes, we got something on and, we just might overlook it. So you can see here, right, the stacked selling imbalance. Here's a stacked buying imbalance, another stacked buying imbalance, another stacked buying imbalance. And that's all well and good. But you know what? You've got to take it a step further because when you have overly aggressive trading, something that's causing an imbalance in the market, you know that there is something happening in the market, right? Because why is there so much aggressive trading that the market is out of balance, right? If it was just black numbers in the footprint, that would be your normal market facilitating trade. But now you have it lopsided, so to speak, okay? And when you have that happening, sometimes that generates support or resistance levels, right? These are market generated support or resistance levels. Now, I'm not saying that these levels are going to hold forever, but when you see this aggressive trading, oftentimes the market is going to come back to test that level. And what you want to see is, can this market bounce off that level? Or was that aggressive trading maybe just the result of a big order going through the market, right? And it just had to get through the market for whatever reason. Maybe the guy just get me out of the position. I don't care the price. Boom, buys 300 and just sweeps up through the market. Sometimes it's a big trader. Maybe he knows something, right? Or I'll say knows something, but rather, has an inclination of, something big is about to happen in the market. So what I like to do, right, and this is one of the features of the order flows traders, draw out a zone from those levels, okay? And it's simple. All you got to do is you find the stacked imbalance and change it from fixed to until tested. And what that's going to do is going to draw out sort of this green zone from where the stacked imbalance is, or a red zone from where the stacked selling imbalance is. And so now I know on my chart, I don't have to draw lines. Let the software do it. I'm not one of these people, I got to draw a slanted line here, draw a zone out. Let the computer do it for you. So here, right, I know that I have a stacked buying imbalance here. So I know I got aggressive traders coming in here. I want to see what happens when the market comes back to it, right? Market went up, came back down, hit that level, bounced up. Now people say, well, it traded through, so it was invalidated. Okay, but on this bounce, it's actually a 3-point bounce, right? From, what is this here? 63. This is 63, 63 and a quarter. Bounced all the way back up to, what is that, 66 and a quarter? Definitely 66, about a 3-point move. This one, right, it came back right in the next bar, tested it, and then sold off. Here we got another buying imbalance, stack buying imbalance. Market went up, it's holding, staying above that level, comes back into that level, right? Now this one is a stack buying imbalance that's 5 levels deep. Came back in by 1, 2, 3 levels here. Then it ripped to the upside. You got another stack buying imbalance here. All right, we're trading well above it here, here, here. Stack selling imbalance, came back into it and came off a little bit. This buying imbalance obviously still holding. So another stack buying imbalance, got within 1 tick of it. We're still holding above it. So, being able to have these lines drawn on your chart just gives you a visual representation of one, where there could be potentially some support or resistance in the market based off of the aggressive trading that's taking place. And 2, if we don't come back into it, within a certain time period, then we know that, hey, you know what, possibly, we could be looking at a trending market, right? Because, markets have rotations, right? S&Ps have rotations. And if it's not sort of rotating back, well, then I know that I had some strong directional trade, okay? Here's another, this one came back into it, traded through it, went back up, got another stack buying imbalance here. Again, traded back into it. Now, one thing that, in my opinion is important about order flow is, ideally you want to take advantage of it, especially if it's a stacked imbalance, stacked buying imbalance or stacked selling imbalance, because you know that there's strong aggressive trading going on right now immediately. And if you're looking at, a 5-minute chart or even a 15-minute chart on order flow, there are certain things you can look for on longer term charts, but something like a stacked imbalance, I think, is best utilized as soon as it happens. Again, if it happens on a 5-minute chart, that's all well and good. But, for example, right, this is 9 o'clock here to 9:05 here. And you're going to have this stacked imbalance, and it's going to show on a 5-minute chart because obviously we never came back into it. But in my opinion, the sooner you can take advantage of this stacked imbalance, the better, right? It's going to give you, in my opinion, a better entry rather than waiting, full 5 minutes for the market to close. Because, again, when you're trading, sometimes you get these candles, and it starts out as a green candle and you get all excited and you jump in, but then the candle turns red. I always prefer to wait for the candle to close to give me that confirmation. Yeah, hey, you know what, this is a red candle, or yeah, that's a green candle when trading order flow. Now, if you go to a 30-second chart, I think I got a 30-second chart over here. You know, and people are going to say, well, a 30-second chart, that's too fast. I can't trade that. Well, you know, people that trade things like Bookmap or even a Dome, you know, they're trading by the second, honestly. So, you know, again, it's up to you. I'm not advocating that you have to use a 30-second chart, but if you're using a 30-second chart, right, you're going to see things that are a little bit different. So you can see, like, this is that bar with the stacked sell imbalance right there. Let me just go back here, right? It came back on the 1 minute chart. It looked like, you know, in the next minute it came in there and tested it and then sold off. But on the 30-second chart, right, we actually sold off, came back late in the next bar and came in and tested that zone. Whereas, you know, on the 30-second chart, it came in, sold off, came back up, and then tested it. So you have the zone actually being drawn out here, whereas on the 1 minute chart, it's not being drawn out. So again, you know, if you're trading stacked imbalances, you might want to use a quicker chart rather than a slower chart. You know, slower meaning, you know, a 5-minute chart. But again, I think a 1 minute chart is fine for most traders, right? Again, you know, sometimes, you know, there's you know, people get excited, you know, they see the market moving quickly. You don't want to be on a chart that's going to get you too excited and into the markets, but you know, where you're over trading, that's a big problem for traders. But yeah, I mean, a 1 minute chart is fine. A 30-second chart is fine as well. You could get that you know, a better comprehension of what's happening in the market on a shorter time frame. But again, it's a different style of trading, right? I'm not saying, oh, if you're a 5-minute trader and you're successful at it, stick with it. Stay with what works for you. But I'm just trying to give you, you know, sort of my insights into the market. So anyway, guys, I'm going to end it there. You know, stacked imbalances is something that you know, is market generated based off of the trading. You know, it's not based off of some fancy, you know, mathematical equation or anything like that, other than the difference in the two-way auction, right? Based off of the volume. Okay, you're looking at a certain percentage. That's about as far as the math goes on a stacked imbalance, right? And there's two parts. One, you got to have an imbalance, and two, it has to be neatly stacked on top of each other. So anyway, guys, have a great rest of your day, and I'll catch you guys on the next video. Bye-bye.